This week in economics on the 2nd of May 2015 from WBRN Radio in Boston and on the Bostonred Network. Numbers man here, very interesting situation. We normally do this on the weekend. We're doing it early week, but nonetheless we have a more full set of data to offer up. We have the China PMI from the official China PMI, and we also have the commercial PMI from the market group. Is the smaller PMI. But first we'll start off with the jobs figures from the Bureau of Economic Analysis here. This is national income product accounts, domestic gross products. This is the first quarter advance estimate here, and we'll look at it and see where we are. The real gross domestic product, GDP, increased at an annual rate of 0.7% in Q1 of 2017, according to the advanced estimate released by the Bureau of Economic Analysis. In the fourth quarter of 2016, real GDP increased to 2.1%, basically respectable. The Bureau emphasizes the first quarter advance estimate released today is based upon a source data that is incomplete. Now there will be the second estimate for Q1, a more complete one, will be released on the 26th of May, which we'll have there. Increase in the real GDP in the first quarter reflects positive contributions from non-residential fixed investment, exports, residential fixed investments, and personal consumption expenditure, PCE, that were offset by negative contributions from private inventory, investment, state and local government spending, federal government spending, imports that are are a subtraction in a calculation of GNP. The deceleration in real GNP in the first quarter reflected a deceleration in PCE, downturns in private inventory investment in state and local government spending that were partly offset by an upturn in exports and acceleration in both non-residential and residential fixed investments. The annual update of national income and product accounts covers the first quarter of 2014 through the first quarter of 2017, will be released on July 28th. Current dollar GNP increased at 3%, or 137 billion in Q1 to a level of 19,003.3 billion. In the fourth quarter, current dollar GNP increased 4.2%, or 194.1 billion. Price index for gross domestic purchases increased at 2.6% in Q1, compared with an increase of 2% in Q4. The PCE price index increased at 2.4%, compared with an increase of 2%. Personal income. Current dollar personal income increased to 161.9 billion in Q1, compared with an increase of 154.6 billion in Q4. The acceleration in personal income primarily reflects an acceleration in government social benefits to persons that was partially offset by a downturn in personal dividend income. Disposable personal income increased 121 billion, or 3.4% in Q1, compared with an increase of 141.6 billion, or 4.1% in the fourth quarter. Real disposable personal income increased 1%, compared with an increase of 2%. Personal savings was at 814.2 billion in Q1, compared with 778.9 billion in Q4. The personal saving rate, personal savings as a percentage of disposable income was at 5.7% in Q1 compared with 5.5% in Q4. And that is the end of that part of it. And let's go over to Bloomberg here. Slowest in 3 years. Consumption is worse since 2009. On auto demand, utilities investments a bright spot, including housing and drilling. The U.S. economy expanded at the slowest pace in 3 years. We talked about that. And there's no cause for concern. That's from Ryan Sweet. He's an economist at Moody's Analytics in Westchester, Pennsylvania, citing seasonally adjusted issues in data temporary facts that affect consumers. Business investment is encouraging, while consumers have a little bit of a hangover. They'll bounce back in Q2. Well, we'll see. The data are unlikely to discern the Federal Reserve policymakers from raising interest rates in coming months. We agree right there. Analysts have pointed to issues with Department of Commerce seasonally adjusted growth data. Since 2000, expansion in Q1 each year has averaged 1% compared with 2.2% the rest of the year. That's according to Wells Fargo. The first quarter figure isn't a verdict on the new administration's policies. Economists are generally skeptical that growth will reach the 3 or 4 percentage points on a sustained basis. No doubt about that. Still, their estimates are at, 2.2, 2.3. That's been pretty normal. During the first quarter, the chief driver of growth was a private fixed. We already been over that, so we'll skip it. Economists' forecasts for overall growth range from 0 to 2.2%. GDP estimates in Q1 is the first of 3 quarters, with other releases scheduled in May and June. Well, we'll see in May as we go into the spring. In some parts of the country, the spring is unusually cool. In other parts, we had 99, 98 degrees in Washington, D.C. over the weekend. The 0.3% growth in household consumption, which accounts for 70%. That's what we look at more than anything else. Followed a 3.5 jump from October to December. The median forecast, Bloomberg survey called for 0.9%, and purchases added to 2.3 percentage points to first quarter growth. While some of the slowdown may be temporary, inflation is eating into consumers' wallet. Real disposable income rose at 1% pace in the quarter, the weakest since the fourth quarter of 2013. Even though hiring has been humming along, as they call it, jobless rate 4.5%, is the lowest in decades. Well, it is. Other details, equipment spending advanced at 9.1%, a 2-year high, while investment in non-residential structures, including office buildings, factories, surged at 22.1% after dropping 1.9% the prior quarter at Q4. Residential spending increased at 13.7%, amortized the most since the second quarter of 2015. Final sales to private domestic purchases, which strips out government agencies, inventories, and trade, rose at 2.2% pace after 3.4% advance. Government spending fared worse. Now, government spending will be affected by the national administration once they put that program in. It's a housing freeze at this point in time. Decrease was 1.7%, and taking away 0.3% from growth. State and local outlays, which go in line with federal outlays, 1.6% amortized rate, while spending by federal agencies dropped 1.9%. We'll be watching that very, very carefully. It's one of the items that is overlooked in the public when you have cuts in so-called discretionary spending. that will follow through in your GDP. Also, when you look at such things as Medicare, Medicaid, cuts that will cut into healthcare, medical centers, etc. The report showed price pressures were picking up GDP growth. Price growth rose at what was it, 2.3% in a Q1. A measure of inflation tied to consumer spending, excluding volume, was up 2%. The Fed has their rate at 2.5%. Not a great concern here. Let's look at the energy agency here very quickly. We pulled this up so we can very quickly retail gasoline prices. This is on the first here at $2.44.11 a gallon here, and diesel is at basically 2.5 here also. Let's just look at a little bit of summary here. We'll go into coal production at 13.985 million tons, the way they measure it there. And let's see what else. Well, yeah, for the 29th, we can get the monthly figures here. Crude oil, natural gas production. And just a second here, and we'll should be able to see those percent. Here we go. Thousand barrels per day. We look at this. This is actually a state breakdown here. And crude oil at, let's see. The percentage change is 2.2 here, and this is not really what we want. Just a second here. Let me go to the overview quickly here, and or into gasoline, diesel, and we'll see if we have the number of bales. We may not have that readily where we want it. That's okay. We don't. We can move on to the we have energy use. We're not really that concerned about energy use here. This is monthly crude oil. Yeah, we're not interested in that either. So we'll just move along here as quickly as we can. Okay, we'll just move. Now let us move to where we are stopping next here. Okay, we've done that. I guess we'll go to China as we, wait a minute here. We'll go to the China manufacturing activity growth slowed faster than expected. Now, this is the official figures here via Reuters. China manufacturing sector slowed faster than expected. In April, the official purchase managers index fell to 51.2 in April from the previous month, 51.8, which was the strongest reading since April of 2012. According to Reuters, they predicted at 51.6 is what they predicted, a ninth straight month above the 50 mark. As usual, 50 mark is the mark. Growth in China's service sector slowed slightly, 54 in April compared with the previous month of 55.1. It was the highest since May of 2014. The China's economy grew faster than expected at 6.9% in Q1, boosted by higher government infrastructure payment. Gravity defining a property boom. We look at the property boom there. The central banks expected to guide short-term interest rates higher and step up its oversight on financial institutions. Generally speaking, some analysts believe China's economy may have peaked in Q1, but it's on track to hit the target of around 6.5%, 6.5% respectable. Now, we'll be going to the market cataloging survey, which focuses on more small and medium-sized firms, and it was published on May the 2nd. Now, let's move to here we go. The latest data summary indicates that China's manufacturing started Q2, with a further slowdown in production and new business growth. Employment across the sector, meanwhile, declined at the fastest pace since the start of the year, and the input buying costs only up slightly. So far, cost pressures continue to ease from the peak as seen last year. The points here, let me just get this up a little bit here. I need to do a little adjustment here, just a second, and I'll be back. Okay, output, new orders both increased at a slower rate since September. Staff numbers cut at the quickest pace. Business confidence weakened for the second month running. Now, the comment here, not very much there, from Dr. Director of Macroeconomics at the CEBM Group, Dr. Zhang. Anyway, nonetheless, the general manufacturing PMI was down 0.9 points to 50.3 in April of 2017. The lowest point since September. The sub-indexes of output and new business both fell to the weakest level since September, while the employment index dropped to the lowest in 3 months. Stocks have finished good, stayed in contradictory territory. Companies were rather reluctant to restock. The input price index declined the fourth straight month, while the output process index fell the fifth month running at the break-even 50 points. And they did not have, as they say, very much to say at all here. And let me see what else have we got here. This was a manufacturing PMI. And that is all that we have from the so-called private group here. If we look at, we'll take a quick look at Eurozone. Maybe one. Yeah, we will. Eurozone manufacturing PMI while we are here. And we'll see what the Eurozone is. In general, in Q1, China is slowing, which means that will have an effect on the global economy. Now, this is the final data here. This Eurozone manufacturing expanded at the fastest pace in 5 years. This is at 56.7 in April, the flash at 56.8, and the final at 56.2. Output of new orders, employment also all risen at the quickest pace in 6 years. A little different story here. The manufacturing sector continues to gain momentum at the start of the second quarter, Q2, at 56.7, up from 56.2. The final market Eurozone manufacturing PMI rose to a 6-year high. The PMI was only a tick below the earlier flash of 56.8. 7 of the 8 nations covered improved in their conditions, operating conditions. The exception was Greece, where deterioration was signaled for the 8th straight month. Growth was led in Germany, which to the highest rate of expansion remains close to the March 71-month high. The Netherlands there also at March level of performance was sufficient to place the Netherlands in the third in growth there. Austria was in second place. PMI readings from various ones covered by the survey. France, Italy, and Austria saw a growth acceleration to rates last achieved around 6 years ago. Rates of expansion also recovered from the lows in Ireland and in Spain. Now, Spain was at 54.5, Greece at 48.2, which is good for Greece. France, which the elections are coming up, at 55.1, that is a 72-month high for France. Italy at 56.2, that's a 73-month high there. Underpinning the gains in the level of a Eurozone manufacturing PMI with strong rates of expansion in new output, new orders, faster job creation, longer supply delivery also had a positive effect on the PMI. April saw manufacturing production, new orders, both expand to the greatest extent since April of 2011. New business export also rose at a quicker pace, the quickest pace in 6 years, led by strong but slow gains in Germany, fast rates of expansion in France, Italy, Austria, and Ireland. The Netherlands saw a strong increase in new export work, in further contrast to decrease in Greece. Not unusual there. The improved performance of Eurozone manufacturing also had a positive effect on business confidence. We didn't cover that on the American sector. It's sort of up in the air as to where that is. The market in the U.S. has been up, but was at irrational exuberance because of the new administration. Very difficult to say at this standpoint. We'll know more in Q2 and Q3. Stronger confidence among manufacturers also encouraged further job creation. The rate of increase in staffing accelerated at fast pace in 6 years. Need to do that. Europe's solid job creation was seen in almost all the nations. An exception, obviously, was Greece. Part of the increase in employment was attributed to a rise in backlog of work, itself a byproduct of strong inflows of new work. Received outstanding business has expanded each of the past 24 months. Price pressures remain elevated during the latest survey. Input costs increased at a rate close to February's 69-month high. Some firms likened the high cost to supply chain factors. This was further highlighted by vendors' lead time lifting to the sharpest degree since May of 2017. And a commentary here from Dr. Chris Williamson at IHS Market, the Eurozone Manufacturing Report, buoyant business conditions in April, signaling and encouraging a solid start to Q2. Production order book and exports all grew at a faster rate in 6 years. The latest survey reading indicates that manufacturing is growing at an annual rate of 4 to 5%, which makes a significant contribution to overall economic growth. Companies are benefiting from historic weak euro, improved growth in key export markets, rising domestic demand. That's very important there. And also ongoing central bank stimulus, including record low interest rates. Optimism about the year ahead, meanwhile, appears unaffected by political worries. Talked a little bit about that with the first 4 months of 2017, seeing confidence remaining elevated at highest level since the future output series started in 212, strong and often accelerating rates of growth were seen in all countries, a notable exception of being Greece. So that is that part of it. We don't have anything else here. Just looking at the market that we'll actually cover in this particular broadcast. Well, we'll have to look more at the U.S. Later in the ball game. Just make sure we don't. We'll take one more quick look at Reuters. And then we'll go to the BBC and do the markets as we close this out from the Feds. Well, we'll get this part in here. And the next Fed meeting is scheduled. Fed's set to leave interest rates unchanged according to this. We had that a June hike. Well, we'll see on that. Federal Reserve is expected to hold interest rates steady at its meeting of this week. Its position at 2 p.m. The central bank, that'll be on Wednesday, tomorrow. Most policymakers have already made plain that in contrast to previous years, the Fed is more confident in its forecasts of 2% growth this year. Of 2 more rate hikes, I'm sorry. The Fed is first tightening cycle in more than a decade. A small percentage point increase. Of course, that's December. That was really not very significant. Also, likely to downplay weakness. We'll see how that turns out from the meeting as to where we'll be going on historic weaknesses. And the way the second here, we're getting a little bit ahead of ourselves since the last meeting. Of course, things have been mixed. The 7/10 sluggish pace have a surge in business investment and faster wage growth in a decade suggests activity will regain momentum as the year progresses on. Job growth also slowed sharply in March. Have attributed the weak first quarter reading. This is what economists to perennial issues with calculation. Well, we'll see on that. I'm not want to get too much into that one. Policymakers are gearing up to announce sometime this year when and how the Fed will begin shrinking its $4.5 trillion balance sheet. Well, we'll see on that one how that turns out. We'll go now to the BBC. Yeah. Le Pen being accused of plagiarism, and not so sure about that. Well, on the political part of our WBR broadcast, Boston Red will talk more about that particular part of it. Ms. Le Pen and the French election and where the French election is going. It hasn't had much, so far on the economic part of the scenario. And we're having a little bit of trouble here getting up our BBC screen here. Oops. There we go. Higher oil prices boost BP. There, well, we'll look at how high those... we just got something in on UK factory growth. Just came in to the BBC, or came on the BBC. Here, it's a 3-year high is where it is at this point in the UK. And the interim, while things are coming over here, Facebook denies targeting insecure users. Well, interesting. Facebook, incidentally, and also one other social media were actually defrauded. Very interesting situation coming out there, and we'll look to see where that is going with Facebook. These technical companies have been advancing some as much as 25% percentage points. So we'll see where that is taking us, and where that's taking us is we disappeared. Our browser crashed. Oh well. Anyway, sometimes when you're doing a live program, well, we'll see. We'll get a new browser as the answer always to that sort of situation. And we'll head back to the BBC and get the rest of the business report here. Not certain why we crashed, but okay. There you go. Back to BP. We'll get the factory data, then we'll go back to British Petroleum. Growth at 3-month high here. This is survey suggested that. Now this is the purchase managing. We didn't get it. Oh, we already got this. This is the market purchasing manager index PMI at 57.3 from 54.2 in March. The reading above 50, no doubt about that. Official figures from the National Office of Statistics last week indicated that the UK economy grew at 0.3% in the first 3 months of the year, the slowest rate since Q1 of 2016. Now that is the official there, although only 10%, accounting for 10% of the economy. The upturn in manufacturing represents some welcome and good news. That is from Rob Dotson. He's a senior economist at INS Market. After slowing in GDP. Well, anyway, that is better than nothing, as they say. But the UK economy, as they enter into Brexit, we see difficulty ahead for that particular economy. Now, the BP at 1.4 billion. That was their profit on a replacement cost, compared with a loss of 485 million. Oil prices have been 35% higher in the first 3 months of 2017 compared with a year earlier. And we'll see where that's taking a toll. Underlying replacement cost profit, the company's preferred measure was at 1.5 billion compared with 532 billion a year ago. Operating cash flow rose to 4.4 billion from 3 billion a year ago. There, reported gas and oil and gas production was 5% higher than in 2016. And that is BP. Let me see if we missed anyone here. So petrol prices being up at 35%, the effects on consumers. Sterling is back at $1.29. The pound reverses earlier issues, losses, against the dollar there. So we'll see where that is taking us. And I'll get this Facebook story, and then we'll go and do the numbers. Targeting insecure users. Facebook has denied it targeted insecure young people in order to push advertisement over. That is something a research paper reported on, but not published by the Australian newspaper. Facebook confirmed research was shared with advertisers, and the data by the Australian researchers was intended to help marketers understand how people express themselves on Facebook. Stressed and stupid. The ability to monitor pictures and other posts of users who may be feeling stressed, defeated, anxious, nervous, stupid, overwhelmed, silly, etc. This is very interesting stuff here. Nonetheless, we'll do the markets. That's interesting. We'll have to look at that paper. Little intellectual curiosity on my part there, as we let's see. Oops, get the market data here, and the markets. We'll see where we are. The Global 30. This is on Tuesday, unless otherwise noted. The change here for the Global 30 is 18.5. The FTSE All Share at 20.96 today, and in Amsterdam they're at 2.90. The DAC is at 20.82. In Paris they're at 22.88. In Brussels at 22.36. In Madrid at 87.80. In Zurich at 46.46. In Moscow at 7.39. In Johannesburg, this is on Friday, they were in at negative 294.82. In Bombay today, 2.78. On Friday in Karachi at 180.80 in the negative. In Lahore in the negative also on Friday at 45.11. In Colombo today at negative 2.30. In Tehran today 115.50. In Sydney a negative 5. The Nikkei 135.18 today. And Hang Seng in Hong Kong at 81. In Shanghai negative 10.95. That's today on Tuesday. And on Monday in New York, the Dow was negative 57.05. The Nasdaq at 44. The Merck, that's the commodities market on the University of Chicago, at 4.13. In San Pablo on Monday, negative 1046.17. And in Mexico on Friday, a negative 668.42. On to commodities. And we'll look at the petrol prices here and see exactly where they are. Brent crude today was up 59 cents at $52.11. On the spot was up 1 cent at 54.9. West Texas Intermediate was up 40 cents at $49.24. T-Boone Pickers jumping for joy. He remembers $15 a barrel oil. On the Forex, gold on Friday was down $1.25 at $1,264.30. Dubai Gold futures were down $11.60 at $1,257.70. Silver was unchanged at $17.41. And we'll go to the Euronext Life futures. I don't know why we like those, but anyway. Corn was up $1.50. Cocoa was up $5. Robusta coffee $61. Futures. Oh boy. The Bloomberg Commodity Index on a Monday at 84.21 there. That was in the afternoon. So it is rising, as one would say. This will do it for those in business. Make the week a productive one. For the consumer, obviously keep your eye on the ball. And most consumers evidently are keeping their eye on the ball. We'll see you next time.